So inflation data this morning was better than expected. And what I mean by that is it was lower than expected. 3.3% year over year PPI numbers, or producer price index numbers, compared to the forecasted 3.4%. This was a good piece of information for the market, considering everyone is kind of on edge about inflation rising again. So this was kind of a positive thing. Let's take a look at how markets reacted. So overall, in response to this, the stock market is slightly higher here today. Bitcoin is catching a nice little rip, and the dollar index is actually flat, which might be confusing because, again, softer inflation data would suggest that the dollar index would take a break. But I want to talk a little bit about today's price action that I think will likely be consistent throughout the rest of the day. Today we had the producer price index numbers, but tomorrow we have the consumer price index numbers. So the full story on inflation will kind of be given to us, or most of the inflation story will be given to us finally on tomorrow's data with CPI. So the reason I bring that up is that I think today the inflation numbers were good starting points to work with, but the question will be tomorrow, does CPI confirm that theory or reverse that theory in terms of inflation maybe softer than what was expected? And I think when we look at the price action of the dollar index, for you to really see this thing actually crack and start to potentially go back and retest areas like 108 or perhaps even break that 108 level, you really need to see a soft CPI print to relieve some of the market tension. You can, however, see that the dollar index coming down just slightly here today is giving just a slight relief rally to things like the euro, as well as the pound, which less so, the Kiwi dollar and the dollar CAD slightly seeing just a little bit of a reset here with just modest dollar weakness. That being said, yields are hardly moved here today, which kind of just goes to show you that the market is still waiting for that CPI print to really get a clue as to whether or not inflation is, really going to sustainably rise from here or kind of softening up a bit. Gold on the day is just modestly higher off this PPI number because, again, this is good news for gold. Anytime you get soft inflation, that would suggest that the Fed can then cut rates. Now, the ideal scenario is that the economy is tanking and inflation is tanking. That's the best case scenario for gold. Basically, the idea being in that situation that the Fed is going to cut rates rapidly, deteriorating the value of currency very quickly, which makes gold look really attractive. But that's not the environment that we're in right now. Right now with gold, what we see is this choppy, indecisive market. And I think that it's because you've got inflation sticky and the economy strong, but then also geopolitical risks. So you have forces on both sides of this trend. And that's why I think we've just sustained this very choppy, range-bound market. And personally, I think that is likely to stay the case for gold until you get one of those stories drastically changing. For example, if CPI data is very, very low tomorrow and it shows signs that the Fed could then cut rates, we may actually see a breakout and perhaps a sustained move back up to those recent highs. But if CPI disappoints, meaning CPI is higher than expected and inflation is coming in strong, then gold could continue to just kind of chop sideways and stay in this range. Very soon, we are ending our 30% off discount, by the way, inside of our VIP Discord. If you'd like to get trade notifications anytime I place a position, I trade gold, Forex, indices, cryptocurrencies, and stocks. If you'd like to see anytime I take a position and you'd like to join the Discord chat room, it is a private group for serious traders. And if that sounds like you, if that sounds like it would be beneficial to you, you can see all the trades that I'm taking with full breakdowns, explanations, and analysis. I'd love to have you join the group. If that's something that you're interested in, there's a link down below in the description to find out more information. You can use the promo code that's on the screen, or if you send us a direct message, we'll also give you some more information, share some examples with you, so on and so forth. But I would love to have some more of you guys join the Discord and follow along with what's happening on the trading side, as hopefully a way for you to get a better insight as to why I take trades, why the positions are taken, rather than just a copy service. This is really meant to be an educational and insightful service for traders looking to follow along with what I'm looking at in the markets. So come join us if you'd like. The link and all the promo code information is in the description below. Oil is also giving back a little bit of its gains here today, coming up into that resistance area around 79. We did see a little bit of sell pressure come in on this producer price index number. Of course, high inflation is actually kind of coincides with rising oil prices. A lot of times when you get big shoots in the upward direction of oil prices or inflation, they kind of are brother and sister, if you will, where one goes, the other kind of follows to one degree or another. So oil prices gave back a little bit bit of their steam recently here, just kind of relaxing a little bit off that PPI number. If you get really cool CPI numbers tomorrow, we actually could see the follow through to the downside there. And I think that if oil does sell off, a very quick spot that it would head to retest, in my opinion, would be this 38 to 50%, 38.2 to 50% retracement of this recent move that we've seen. And while I'm not necessarily bearish on oil, I do think it's due for a bit of a pullback. And if it does pull back, then we might get the opportunity to take advantage of some entries in my own kind of trading strategy. I'm looking for oil bullish setups, but I've got to wait for a pullback on the technical basis to confirm the idea that my system is telling me on the US oil very bullish side. This has been an excellent idea, but I've missed the entry just narrowly here. In fact, I just meant to get into this trade. I actually on the live stream was discussing getting long oil, and price just barely missed where I was looking to get long and ran off without me. But it happens. It's a little frustrating when that does occur, but hey, it's just part of trading. While we're on the topic of commodities, you can actually see silver is having a little bit of a bounce back on this number. You'll see that if we take a look at the percentage returns, if we zoom in over here, you can see silver moves typically a lot more than gold. So when you have an update for gold, usually, not always, but often enough, silver is moving, more aggressively on a downside day or an upside day. So we're seeing silver bounce back pretty nicely, up 1% here today. Bitcoin is one of my favorite charts right now. I'm currently long with a stop loss below this structure low here. Got a nice little push off of this area of support, a little wick to the downside here and then reversal. I am long currently and looking for a break through this structure high in order to start really trailing stops into profit. And when we look at the aggregate level stuff for S&P 500, the US economy still looks really good across the board. You can see we've got a lot of blue right here. Basically, most economic metrics that we study, like GDP growth, manufacturing data, services data, retail sales data, CPI, core CPI, NFP, unemployment rate, most of these things are suggesting upside for the U.S. economy, and that the U.S. economy is humming along pretty nicely. I mean, GDP numbers came in much higher than forecasted. Services PMI came in much better than expected. You've had retail sales relatively strong. So all of these things are stuff that we track to kind of get an idea of the economy. Part of the reason that I'm bullish on Bitcoin is for the same reason I'm bullish on stocks. The U.S. economy being a strong, economy is not a bad thing whatsoever for indices and risk assets in general. The only thing that kind of deconstructs that idea is if inflation runs crazy. But right now, inflation, I would argue, is not at a crazy level. Now, CPI has trended lower, gone sideways, trended lower, and now is at risk of trending up again. But I still see we're just below 3%. So we're not at like a critical inflation level. And so we have a strong economy. Inflation has come down a long ways. I still really like the setup and story for risk assets in 2025. And until that changes, I'm going to look to trade in that direction. Basically, long things like Bitcoin, stocks, etc. Today's video is sponsored by Vantage, which is linked down below in the description. They allow traders outside of the US to trade CFDs on things like stocks, indices, cryptocurrencies, and pretty much everything else. It's kind of your one-stop shop brokerage, and they offer a generous deposit bonus to viewers of my channel. So find out all the information about Vantage, check out the brokerage, see if it's right for you, do your own due diligence, and again, make sure to use that link below for that sign-up bonus. That is a referral link, and if you choose to use that, you'll also be supporting my channel. I really appreciate it. Thanks for watching. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.